Hello guys, glad to have you on board again. Today we're going to do kind of a post-traumatic examination of the crypto market after this absolutely wrecking session that we've got yesterday. That was kind of, I think, the termination pattern of something that has been started almost a month and a half ago, that has been wrong footing entirely this market for 5 consecutive weeks without a single retracement. It really has been all about, boy, we're gonna pull you right back down to support. It really much looks like another yet manipulation on the market by speculative derivative markets trading, and we can definitely confirm that by all the metrics that we now have. Volume is in existence, no one has been trading this, the spot market is dried out of liquidity. Even though we have experienced on the biggest guys 40% fucking arbitraged pullbacks, nothing has changed in the background. We're still driving liquidity off the exchanges, so the liquidity off exchange is where it's happening. Either ODC deals or on-chain deals or DeFi deals, but more than anything else, the market is maturing more and more as liquidity on centralized exchanges is getting lower and lower, which means those who offer those derivative contracts, which the smart money has been manipulating prices with, they are getting more and more dangerous by the day. Those who play with futures contracts, those who play with all of these things may have a lot of trouble to think about, because as liquidity gets drained out of these big market makers, we have a lot of troubles ahead. It has always been a plan, on my personal opinion, but I think more than anything else, what happened during the latest few weeks is probably the last one of a kind. In the future, derivative markets will be on blockchains as well. DeFi products will eventually start releasing derivative contracts as well, but we're going to be able to track everything. So the centralized big mess of derivative bullshit is probably reaching its end. So this is the last attack that could be done on this crypto market, on that nature of attack. Very speculative, and it very much tastes like professional finance, just taking the grip over derivative market to just wrong foot the retails. But it is getting more and more dangerous to do this because the true liquidity is very much not there. So they're gonna have to patch their speculative gambles by taking lending liquidities here and there and whatever, but we're gonna be able to track everything. So if there's one thing I can tell you for this, is that I think during the next few weeks, we're going to start unpacking what happens. But the difference between what happens in the crypto market and the same events that could happen in the regular market is that, well, this is not the AMF, this is not the SEC. This is you and I, regular folks that can just take on the blockchain, investigate, and try to find out the clues of whatever truly happened. And that is what cryptos have been all about all along. So if you ever convince yourself that for some reasons crypto was just another bubble or things like that, no, it's not. It's the future. It's just that it's what the financial markets should always have been. These blurry shadow enclaves in which a lot of money is exchanged without a single oversight from the public, is what the finance has been all about. And I mean, if you know how it actually happens behind the scenes, yes, of course, most of it is handled through algorithms and stuff like that. So crypto isn't different in that perspective. But the thing is that those algos are proprietary, hidden, no one knows anything about them, and there are lots of cheats that have been just, put it in plain sight by either insider people who just released the information when they left the company saying that, boy, we've manipulated prices so many times, on this occasion, and that. That's not going to happen with cryptos. You cannot manipulate an algorithm. The algorithm, once it's released, it's on a public blockchain, and the code is visible for everyone. So that is the big difference. The shadow manipulation stuff, it's not going to happen with crypto. That's also the reason why these guys fear it so much, because their business model, they're going to have to adjust. Like I said, they'll probably find their way into cryptos and find their way to cheat with the crypto market as well over time. But in the meantime, their good old business model is reaching its end, because the only way they can do it is through derivative markets, with the shadow system in which big exchanges can do these, okay, I'm going to give you more liquidity than I could eventually provide, and we're going to settle the aftermath afterwards. If you think you can move prices, well, if we can both profit from it, then let's just do it. That's exactly what market makers have been all about. That's exactly what led us to where we are today. This collusion between market makers. When everyone can profit from a nasty event, well, why not do it? Well, that's the thing. Now in cryptos, that's not going to be possible because everything you do is going to be tracked. Everything you try to achieve is going to be unpacked afterwards. We know where the money came from, we know where it ended, and all of these things. Though I think that the first thing we're going to get on the aftermath of these things is a lot of information to process. Okay, so that was the first one. Then the second one is, I think, going to be very interesting, is to look at the fact that we finally had the consolidation, meaning that we've seen an entire cycle of crazily bullish demand, ended up by this demand totally being dried out due to very bearish sentiments, until the fact that we actually totally destroyed supply on some specific assets by some targeted manipulations. What's staggering is to see that the entire market has been falling, meaning that no one was able to escape this thing. Even though I've always mentioned that we could get a K-shaped recovery in which some assets will be able to sustain volatility and others will be totally wrecked if anyone was trying to pull them down, well, it turns out I was wrong with this one. Everyone took a hit. Everyone. The second thing, I've targeted some specific projects back then. I was very aggressive on the AVAX army, telling you, boys, you are stupid. There is way too much inflation on the last year. For AVAX, prices will pull down, even if there is no speculative attack. It's just that as demand will wind down, and it will obviously do at some point, prices will fall down the cliff because there's no other choice due to the enormous inflation there is. So, well, I've always made it clear, buy AVAX below $50. Well, we've got there. Thank you. Second things I always told you is that you weren't seeing the true risk with Luna tokens. I always said there is a positive feedback loop, so when the shit will hit the fan, it will be a negative feedback loop. It's inevitable. It's going to happen. This thing is going to depeg, and we're going to see how big it depegs, and we're going to see how the foundation will respond to this. So we've got all those answers. It depegged so big, I mean enormously big in terms of, I never thought this would depeg that much. The Luna totally crashed and it's definitely not going to recover ASAP. We're going to see the structure. Luna is now going to big range. We terminated a bull cycle. Like I said, this is great when it goes up, but when a bull cycle is terminated, I've always said I'm going to short that fucking thing on $120 to $125. I've been missed by just a tiny bit. Just a bit higher and I was net short on this thing and I could have taken a $100 to the downside. I've always made it clear, buy that thing below $25. Same thing. Thank you guys. So the thing is that I had to say that I told you so. But in that perspective, I've made it real clear that few projects were definitely not traded correctly because of their supply. And I've always made it clear, they are not the only ones, but the most dangerous ones in which I've seen beliefs, very dangerous beliefs, were AVAX and Luna, and I was right on both of them. That doesn't mean that I was right everywhere. I never thought that good projects like Atoms with good tokenomics and things like that will fall down the rabbit holes as well, but they did. And basically, really everyone took a hit. So that's the second element of surprise to me. Total failure in that K-shaped because everyone took a hit. So I think my K-shaped recovery stuff is no longer the case, which leaves me with two options. Those who took the hit like that, I think the best is an L, meaning that they're going to stay there for long, and hopefully they will eventually retrace to the mean, if there is ever a mean, because once again, we're in very competitive markets, and there are, many algorithmic stablecoins out there. So Luna has been like the best, because everyone thought it was never going to fail. Well, it did, so now we pulled it right back to the same old game, multiple alternate solutions. Some are centralized, some others decentralized, but none is perfect. So anyway, we're going to see the aftermath of it, but I think it's going to take a little while until Luna ever gets demanded again. And the supply is still fucking dynamic, so it is impossible to actually give it a price because it's too dynamic. Okay, and the last element, very, very, very important, I wanted to point out today, is that you have to understand that this is all related to the revolution cryptos are actually bringing. There are very much different ways to pull it in forward. some of the assets, like the 95%, will die. That's inevitable. There is way too much competition. There are like dozens of DEXs and dozens of liquidity lending protocols or whatever. This is not going to happen in the future. Money will concentrate, and the networks are pretty much mature today. I mean, we know that the Bitcoins are going to be part of the futures. We know Ethereums will be as well. There are a few left spots in which I think Solana's, AVAX, and ATOMs could eventually fit in. Binance as well. Like I said, I made my own bets. But by the end of the next cycle, we're going to know which one of these are the ones. So we're going to figure out the entire network shape of the future crypto system. Of course, these things will evolve, and they will know bull and bear market, and will probably create a bubble and a crash before we actually get to mainstream daily use cases of these things, just like the dot-com bubble. But still, we're going to have the shape of it, just like the Amazons, the Facebooks, the Googles were already there by then. So this is what I think it is, and you cannot mix up these things. Okay, the networks will be used. They will survive the bear market and the crash if we ever get a bubble, but that's it. They're going to survive. So some of the things that we trade today are going to be there 10 years from now, and they're going to have a much bigger economical impact that they have today. So the second mistake that people make out of this assumption is that they think that these chaos and these targeted attacks are the norm in cryptos, that you're going to have to get used to 70% drawdowns and stuff like that. That's the sign of immaturity of projects. But when projects do mature, they never go down to never 70% or something. So those who took a hard hit, like the Solanas, the BNBs, the Link Atoms, I think AVAX as well, this is the last time these guys are taking that big of a hard hit. If they succeed taking on their spots and their role into the overall big picture, they're going to become ETH and Bitcoin likes. 50% drawdown is the best they can get in the future. And let me be real clear, I think for ETH and Bitcoin, that's the last time we experienced 50% drawdown. Yeah, we've been entirely wrong-footed, it's been painful, it's very, very dangerous in terms of sentiment, but there's one thing that is visible on-chain. The true liquidity from derivative exchanges and stuff like that is getting shrinker by the day. And it's going to be a problem. Because the good old Wall Street finance, this is the vector that they're using to target their attacks. They're using derivative markets. So pay attention to this. The spot market is the true strength of cryptos. So I told you, if there's one thing I take out of this experience, is that I do not consider this as being the norm, but rather the exception. I've made my personal choices and I was wrong. I thought we would never do this, and we did. I betted on the project that I thought was the safest, and that if we ever had a coordinated attack, they would sustain the prices more than the others. Turns out I was wrong. They took a hard hit as well. So future will trickle down the good ones and the bad ones, and maybe I just don't have the good ones, and I'll be reading to Joe on board for the good ones and let go with the wrong ones. But until then, these are weekly to monthly chart reactions that I want. It is and never has been about a 4-hour decision. So what we've experienced is a 4-hour volatility attack. It was possible, yes, but not likely, in my personal opinion. Turns out it happened. I could have profited from this, but I did not. No biggies. Everyone is wasting potential trades on a day-to-day basis. I don't blame myself for this. It's more like I could have done a better job, but I did not. So, well, once again, what matters is what lessons you take out of this. I take no lessons from this. Yeah, I could have done better. But does that mean I need to change anything and consider that the next time I will not do the same thing? Well, no, I'm sorry. The next time I'll do exactly the same thing. Because that's what it is. Statistically speaking, I think that whatever happened was not the likeliest outcome, and I'm a stat guy. I might be right wrong sometimes, yes, definitely, but if there's one thing I'm very good at, it's to point out the risks. I see the risks much better than the average person, and I've always warned you about AVAX's risks, Luna's risks, and as you can see, these got exactly hit the way I thought they would. And this looked like an improbable stuff, okay? When you see this, have you seen such charts multiple times? No, this looks like an anomaly, but I made it clear this is not an anomaly to me. This is just the norm. This had to happen. So now that it did, I think we're back to value for these tokens. So we'll see what's next to come. I think a lot of other projects have been suffering hard withdrawal effects with very little liquidity as well. I mean, look at the volumes. Yes, on Luna, the volume is significant. The volume is there. So whatever happens in Luna is not something you can just flush away like it never happened. And there's still 5 fucking days to go on for these weekly candles. So it definitely has been about value on Luna. Well, atoms, not that much. Look at the volume. Non-existent. Nothing. No one pays a fucking attention. So even though we've printed prices, we haven't printed value for these tokens. So I'm very much concerned about the fact that the entire crypto market has been hit the same way, where the liquidity is definitely not the same in many projects. So I know that this is a very psychological stuff or whatever, but I think most importantly, the reason for this is this thing that we've already mentioned. So it's not translated in English, but that's the revolution pattern. Okay, there are some cycles from those who come from the old world, and there are some cycles felt and emotions felt by those who are from the new world. Though this is basically us and them. I don't like to say this, okay, but that it's not us versus them. It's just that this is the old game who's going to fight against, and this is the new game who's fighting for, okay? So there's going to be a cycle, and I always made it clear, this is an opposite cycle, meaning that when these guys lose control, they're going to have absolutely dangerous kinds of emotions. Fight, flight, they're going to be angry at you and some things like that. So this is like the regulator is going to come for you, big asses. Okay, so this is really all about that. This is really violence. This is Elizabeth Warren and stuff like that. They fear of losing control, so they're going to say it's dangerous. You dangerous folks. We're going to have to put you in jail if you trade cryptocurrencies. Okay, so absolutely radical behaviors. When, on the opposite hand, you take control. So for the first time, the market is proving you right, and you're getting overexcited about it. Euphoric, risk denial, excessive confidence. These are all the things that you've experienced in the 2021 breakout. Okay, then comes this thing. They resignate and they capitulate. They say, okay, we were wrong. Damn it, fuck it. We're going to have to adjust. But in the meantime, they feel desperate because the world is changing and they're going to have to make it with it, to get along with it. So they let go, okay? When on the opposite hand, this creates a range. So when they capitulate, you get nervous and you doubt because whatever confidence you had is starting to deteriorate as the momentum slows down. Boy, 1 year of fucking flat range. How come that isn't nervosity and doubt? So now we're at the end of it, and I think we're nearing the first step of adaptation versus delusion. So they've adapted. They think that this is going to be business back as usual. So they do the same old thing. What is the Wall Streeters doing best when they want to manipulate a market? They go on to the casino. They go into the derivative markets. So they've been using their good old games to manipulate prices on an existent supply. So this was easy for them. They got infinite pockets, and they could use derivative markets to do whatever the fuck they wanted. And I think that what they wanted is just to see these things moving violently and just to see how they reacted. They were just jiggling, shifting stuff to see how the shuffling events were actually turning out. So I think they're more interested in the outcome rather than the how. They want to see the reactions. But most importantly, the problem is that they have absolutely radical emotions. They want revenge and they want to punish you. And this is very dangerous because that's exactly what I think has happened yesterday. This was a punishment. Some people were happy to see the crypto market falling off the cliff. These fucking nasty speculators, they thought this was the future. Well, it is the future. But the thing is that they're going to have to adapt because they have no choice. These things are just more efficient than the current system. Okay, secondly is on our end, the delusion phase is what you want to avoid because this is where you get the negative emotion being impacting in your perceptions of true risks. That means you're going to get into the fight, flight, or denial, classical systems, okay? So know which one is your favorite and know what reaction is going to come out of it. If you are denial, that means basically number one denial response is to push away the stop losses, meaning you took a bit too much risk, you were trading short term and you fear of being stopped out, so you're going to push away the stop loss until it actually ends up liquidation. Which means the problem is by pushing the stop loss, you may eventually survive this event. But this is going to be a big problem for you in the future because the delusion phase, there might be more of them. We're in a multi-time frame trend. So I think now we're experiencing the daily chart delusion. So the daily chart looks ugly and stuff like that. But there are going to be other ugly ranges. We're going to have to range in the weekly chart as well. So I think there's going to be other aggressive and delusion phase opposition in the future. So yeah, denial is if you push your stop loss, maybe it's going to work out that time. But sooner or later, there's going to be one case in which you won't be able to push that stop loss further away than the liquidation. And liquidation basically says goodbye. There's nothing left. That was a cool party, but now go home. So there's no trading if you ever risk of losing it all. Because if you ever do this, you will lose it all one day. It's inevitable. It could be in 5, 10, 15 years. But if you trade it that way, it's going to happen. And no matter how much gains you could make, if the end is to lose it all, then what's the point? Okay, so think about it. Denial, huge dangerous. Then there's the fight response. Fight response is going to be the guy who's going to buy each and every level without risk limitation, meaning that either you had a plan of DCA, you knew how much you would invest, and well, if it goes beyond your DCA levels, well, that's how it is. You're going to wait for the market to respond positively afterwards, and you would have executed your trade according to the plan. The fight response is the opposite, is I bought it all on the first levels, and then I think that, boy, I've got half the price I paid the first time, so this is a good point to buy again. I'm going to take some credits and buy. By doing this, yes, you decrease your average entry price, but you're also increasing the level of the margin stop loss. And in that perspective, you're going to end up just like the denial. Someday, you're going to be wrecked because, well, the market is going to act very irrational, just to the point that it's going to be down enough to take you out entirely. And it will rebound right after, of course, because that's what generally happens. So very dangerous type of behavior. Over-leveraging position by buying in every time the market goes down. Well as the denial, it may work out this time, but sooner or later you're going to die because of it. And the last one, very dangerous, is a flight. So in that perspective, you're going to say, well, that was too much for me. I've bought my coins at this price, 50% drawdown or 35 or whatever drawdown you're experiencing. That's too much for me. I can't handle this. I'm out. Though you're going to buy high, sell low. Worst case scenario. Most importantly, we're in a fucking revolution, folks. So the value is going to increase if you caught the good projects. Reason why, it is not entering fight, flight, or denial to say, I have a set of assets. Okay, that's exactly what I do personally. I have a set of diversified assets which do not compete one with another. They have each their own separate bucket of liquidity and demand. Not all of them will succeed, but there is high chance that many of them will succeed. And by that, that means many of them will move their daily range value to other areas, likely higher ones. Okay? So that's what I do. I'm not denial or whatever, and I think that's what you should do as well. In order to get through this delusion phase, you need to have confidence in your investments and understand that volatility is part of the game. If you intend to make 5 to 10x returns on investments, boy, how the fuck can't you even think about handling 50% drawdowns? That's just the norm. If you use regular Sharpe ratios, for that amount of potential reward, a 50% drawdown is like a very good Sharpe ratio. So in that perspective, how much risk do you take for that amount of gain is what matters. 50% drawdowns on capital is normal. If you think that I do not have that, yes, my current account portfolio drawdown is 50%, meaning that it's gone up and it's gone to retrace 50% from now. I'm not losing 50% of my capital. That's totally different stuff. I haven't invested at the top. That just means that from the highest value, for the highest price of my account, down to what's been printed yesterday, there was a 50% drawdown. Yes, it's unpleasant. And yes, out of 50% drawdowns, people tend to be stupid. But I'm professional, so I know it happens. I also know that. I'm standing still. I sleep well. I have no problem with that. I never gambled on that thing to happen. I knew it could happen. I knew it was very less likely, so I've made my choices. I could have made better ones, but still, I would do the same ones if I had to be in a similar situation in the future. Because I know these rare events are just what they are, rare events. And I'm more betting on the statistical side of the equation rather than gambling on the fact that these rare elements are the norm rather than the exception. So that's what it is. Don't try to be perfect. When these markets are so volatile and when they can gamble up or down into value areas of 70% retracements, that means there is crazy lot of money to make out of them if you succeed on seeing the next trend. Of course, there will be no trends for everyone. There's no room for every project. And the lower you go down the top list, the lower the chances to actually succeed. That being said, more than enough for today. I hope you have the aftermath of yesterday thing. So to sum up the core information, this is nasty Wall Street speculative attack. They've been using derivative contracts because some projects have seen absolutely no spot liquidity and volumes traded. So it all happened in derivative markets in very low demanded. So this was the prerequisite thing. They wanted you not to trade, to just look at this market because you were waiting for a signal. Well, they sent you a signal. We're going to jiggle up and shuffle the decks, and we're going to see how you DOMs react. If you were dumb enough to sell because you fight, flight, or denial, because you've been stopped out or liquidated, well, too bad. It happens. I hope you did not. But yeah, I'm definitely sure that some people fell down this crack. It's not to say that I have so many times repeated these things over and over again. Don't do this, don't do this, don't do this, don't do this, don't do this. And yes, I mean, if you still did, I'm sorry. You have no other choice but either to learn and start all over again, or just get the hell out of it and say, well, trading is not for me. That was a painful experience, but still, I mean, life is more important than trading. Secondly, well, if you survived, don't take it as the norm. This is the exception. And if your project succeed shifting to weekly areas by moving prices higher into another ranging areas, that means that the volatility will reduce over time. They will get bigger, so it will be more difficult to attack these projects. As the liquidity increases, the volatility will decrease proportionally. So the 70% drawdowns on, I can take Adam as an example. If we say goodbye to this area and, for example, gets the price 150 or something, okay? That means if you think that there's going to be another 70% drawdown, not going to happen, folks. Not going to happen. Okay, so these are all the lessons you need to take out of this. Yes, coordinated speculative attack. That's been settling the score on some very dangerous supplied assets like AVAX, Lunas and stuff, and these have been traded with volumes, okay? All of the other ones, I'm very surprised that they've been taking and dealt with the same amount of volatility, but still, that's the crypto market. Very low liquid projects, so they've been moving across the board. Though still, lots of these projects have been traded with very low volume, meaning that even if the prices went to very low levels, this wasn't valued. We never really put value into these projects. They've just been gambled against other, but very low liquid. Remember that value comes out of prices and volume. Without volume, prices don't tell the story. Prices can just be randomly volatile, and that's it. Think about value. We are in an area of disruptive, revolutionary technology. Not a bubble. Definitely not a bubble. There is a very good video about these subjects in Coin Bureau's latest update. So look at this one. He's done a much better job than I could ever do this. So we're not in a bubble, folks. Definitely not the same kinds of markets. In that perspective, have a good day. Bye-bye.